The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi, folks. Basil Chapman on this Thursday, 27th of October, and what a fascinating session we've had. So I've got this pattern right here. This is the 1-minute E-mini with Chapman wave notations. Now, I could, in fact, I have this already. Let's see if I can do that right now. So this is the 5-minute chart. Let's see what I can do with this. I'll change it to a 1-minute chart just to show you a couple of things that I like to do in patterns. And this is what I show my subscribers every day on my different charts that we're looking at. Remember, in the Chapman wave, we're always looking for at least a peak D and a buy signal that goes to a buy mode. And within that context, and then I always look at the arch formation. Actually, you know what? I think it's even better. I've got it all notated. I don't want to waste time. I've got so much to do here. Look. The 200-period moving average, this is that orange line that's there. Let me see on your particular chart on the YouTube, Tiger YouTube. Yep, it's coming up. Yeah. So this orange 200-period moving average, look at the way it's been resistance, then support, up and away, comes back down. It breaks it. It's support, and then whoosh, come down, go below it. And now what's happened right here at 38.45, it's become resistance again. It's amazing. If you just put these patterns, these tools on your program, everyone has these tools. If you have a program at all that you trade from, it's a simple thing. So here's this orange line. It looks a little bit orange. Yeah, it's kind of orangey in the YouTube. Great. So now look at this. You always look for an identifiable low bar to start a count, and the count says it should get to a D. Well, this goes from right here. Actually, I want to do this quickly because there's so much to do. This is at 8:16 on the 27th, and today's the 27th, so it's 8:16 this morning. So it goes peak A, hits the 200-period moving average, retest, it holds that, it doesn't break it by even 25, travels in 25 cents increments, doesn't even break it, tests it 4 times, and then breaks out. It goes to peak B, peak C. 8:15 was the news, and it comes out, whatever the news was, the market loved it, and spiraled up, and then it pulled back. This is the E-mini, which was very weak earlier on. Let's just look at this. I haven't actually got I forgot to finish the notation. It went to a peak D. Always looking for 4 higher peaks, and that peak D right there, yes, you see, and there's your D. So from the starting point right there, it restarted a few times right there, comes back down, tested A again, B, that's a B because it's exactly the same. That's under the B, so that's good. Here goes your C, there goes your D at 723. Right on the 200-period exponential moving average. The objective in the Chapman wave is to get you from a starting point to at least a peak D. That will be if you get upgraded from a buy signal to a buy mode. And I also use moving averages, all sorts of things that are just sitting there. I don't have to do anything. It does all the work for me. So it flips to a buy signal right there at 703, and it goes to a peak D at the 200-period moving average. A little head and shoulders pattern says, be careful. Then it flips to negative, and see that pink from right there at 737 when it finally made that move at 38.44. And what happens is pink, and it goes all the way down, makes a low, tries to rally peak A, B, C, makes an arch formation, comes down and starts a brand new buy mode and goes to what? At 8:16, that's when the news came out, spirals up, the Dow went up huge. Of course, it's got Caterpillar. We're going to go through that in a moment. Caterpillar. Let me just check it out. Merck, McDonald's, just good earnings, boom, on the upside. So then it comes back down, retest, doesn't break it, so that's a peak A. Peak B, the stochastic did hold above 80%, so I can go to an up arrow, and it spirals up to a peak C and then stops. Then it comes down sharply. Why? Because the S&P is very weak. It's got those NASDAQ stocks that are so weak. So it gets pulled back, 200-period moving average becomes support. It makes a cup formation, and I drew in a left side, right side right here, a left side, right side price time match saying, I'm taking this low right here. This is the double bottom low. Oh, didn't mean that. Be careful. Right here. And the reason why I'm taking a little time because it's the same thing that we're doing on the different charts, and I want to show you the Dow chart in a moment. So this is just a preamble to that. It's called, this is the overture. So here we go, 38.40, round number low, twice, and then it goes peak A, peak B on the left, starts a brand new A, didn't see, no, sorry. This is your starting point. That's why I did that. So that means this gets taken out, but that's not the issue. The issue is this is your starting point. Every peak gets counted. So this is A, B, that's C. And in the left side, right side price time match, it goes just underneath at peak D, which is underneath the previous peak C high. So this is all legitimate. E, F pulls back and then pops up in a right arm extension to peak G right there. So what I do now, I'm looking at the left side, right side price time match to the right from that peak G. So it goes back down, has one single pop to the upside, comes back, and it misses by 3 beats, 3 minutes or 4 minutes, going to that exact left side, right side price time match, breaks down in the dreaded H pattern, the lowercase h pattern, the second one, and plummets down. And I had a much bigger, I just had this in from that peak D, because peak D is usually a very important moment, the fourth highest peak. Left side, right side price time match, and look what happened. It went right through it, made a cup formation, and now I can do this live because that F, trough F, is the starting point. The MACD turned up, the unbalanced volume, the stochastic finally broke above the 20% level. And what do we have? We have a peak A, peak B, and we're in leg C. And I could do a price time match right here. Would have done it from there to there. It's already extended that. Now, let me do it from here to here. We don't know if it's going to work. I'm just saying, this is what I like to do. And it happens to work out exactly so many times that I just can't ignore it. Look at this. Here's your viable left side, right side price time match. Right there. I could have made it to that low, that high, but I didn't. And here it is. And let's just see if we can get to the spike up failure 3863.75. Let's call it 3863s. We've already popped to 3860, and we've got a little time to go. Then I'll also do the Chapman wave inside wedge. There we go. Resistance level, we've gone above it, but it's still in play, and I'll draw in the cup formation. I should probably have just taken it to this one. Oh, well, we're already there. So in a shorter time frame, it would have worked perfectly. I was just doing this in a hurry. Normally, I'd go to the outside like that, and that would have taken me to there. And right here, it would have been a bar early. Look at that. So the reason why I wanted to do this is to show you what I'm looking at when we go through the different charts. Here we go. I'll show you the Dow. As we're going to the break, our first break, look at the left side, right side price time match to that leg C in the Dow. I'll be back in a moment. The Dow is up 484, S&P's up 90. Basil, Chapman, Tiger Technicians on.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
All right, so folks, I've got all these tools, TradeStation. Some other platforms have a lot of fabulous tools. I don't know why Fidelity doesn't have as many tools as they should, but look at the pattern. Look, here's the arch formation. Here's a naked chart. I couldn't tell you how many times I like to use naked charts because there's nothing here other than the price movement. I like to use candlesticks because it opens it out, it spreads it out a little bit. And I only use the top and the bottom, and the candles give me other information. But for the Chapman wave notation, I only use the top and the bottom. Look at this. We're going from there in an arch formation. I've always said the market is made up only of straight lines. Let me just go to that right here. Right there. Straight lines up or down, cup formation, arch formation, and a mix of 1 and 2. This is 1 and 3, where it fails at that H pattern, goes lower. That's usually a big negative if it closes below that left side low. On the upside, it's a big positive if it closes in the green reverse Y pattern. Why has it got DXY there? Oh, let me get rid of that. If I cut that, do I cut? Yeah, that's good. And that, if it takes out that left side high, that's very positive. We're going to see that in a moment. So now what I'm talking about is, look at that pattern. And now look at this from here. I'm going to use this one right there, to there, and to there. And you've got yourself a beautiful cup formation. I mean, really. And if I put in the midpoint right here, the midpoint right there, you can see we've got a nice pattern. And you can use your pointer. Everyone has a pointer that shows an X, right? So here it is. Look at that left side, obviously a little bit more on the right side, number of bars, but isn't it just a beautiful arch formation? Breaks, and within 3 bars, it cannot close above the left side low. It means it's going even lower. Yep, it did go lower. Now let's look at the right side. There's your midpoint right there. And we go to the upside, and look at that. Look at the bar symmetry. I've had, if you sign up for my newsletter, you'll also get so many of my webinars, and I talk about all these patterns. I go through them. Now look, I count A, B, C. No, that's not a C because it's the futures, and they close each bar on the 1 minute chart closed exactly the same, 3863, and then it goes to a leg C, and there's your D. I'm expecting, it could be completely wrong, but it happens so many times. I'm anticipating that this leg C in the down, we've been long, we were long down at the bottom there. We just got stopped out. We could jump back in, and now we're long, and we were aggressively long on last Friday at that dip. We were fortunate enough to get 3 times long. A small position, but that's still a lot. I'm 3 times long. And yeah, we are in leg C, and I'm anticipating that by next week we pull back, and then we make a leg D. 32,504 has been the upside target. Today's high is 32,352. We're not there yet, but it's only leg C. But look at the symmetry. Well, it wasn't from the low bar. It was from something else, and that's what I teach. Where do you choose your midpoints for this kind of move? We did it over there, and it worked out nicely. So that's important. Then I've got the Chapman Wave inside track repellent zone. Oh, there's so much to do today. Yeah, I'm yakking away about these things. Look at that peak E at 36,952, the week of January the 5th. Peak E pulls back, and each one of these has become a repellent zone. Is this, now that there's been some change in the dollar coming down, with bonds trying to rally, we'll get to bonds in a moment. Bonds are now up, so yields are coming down a little bit more. This time, and I've got this in the diamonds. Look at this. It's so much easier to see. Oh, it wasn't diamonds. It was the, it was the futures. Here you are. Look, the YM. I drew this in some time ago. I said, I've always looked at the symmetry of these moves. Look at it isn't exact, but it's really close. Look at that cup formation with the lower high in the S&P futures from that January high. And then it goes to a peak B minus because it fails. And that starts off the Chapman Wave inside track repellent zone. Back in August, where we went short, and I wouldn't be surprised if today we're actually taken out of our short position for really nice profits all the way around. Look at this. Peak B minus, and we go to a lower low. So we've had almost symmetry at the bottom, and now we're going to see, is there symmetry at the top? Do we buy somewhere around the about mid-November, it could be sooner, break above and then start holding above this downtrend line, which is right here, 32, well, it's declining. Let's call it 32,900s. And we're way down at 32,300s, a long way to go. This is going to be interesting, isn't it? So here we go. So this is the futures. Now let's go back to everything else. Let's go to the S&P. S&P, maybe by now it's caught up on that. No, it hasn't. It's up 19 to 38.49. And, of course, we've still got Amazon to come out this afternoon. I'm going to go through Amazon for those of you who might have started positions in Amazon. And it had a really nice 10 or 15% rally, and now it's pulled back some. We'll go through that in a moment. But here we are. Leg C, if there's no new high in the S&P above 3886.15 today, then it's going to make peak C, and we do expect a leg D to still come. Here's your Chapman Wave inside wedge, target resistance line. Here's your whole bunch of support in the 3805 to 3775 area. We've got the QQQ. A much sharper pullback, but it's trying to rally. It's down only 74 cents now, 277.18. It was down over 3 before. Trying to hold the 14. And look, the 9-period moving average moved above the 14. If we can get through this by Tuesday of next week, by the beginning of November, without a serious collapse, the buying pressure is going to be intense because look at the VIX index. Down again, down at 27. The 200-period moving average is at 25.96. Look at this sequential pullback from the Chapman Wave. What a technique. I discovered it years ago, and I thought, this is nuts. I've got an outer rim. I call it the inside track repellent propellant zone. And every time I did this on my CD back in 2005, my CD introducing the Chapman Wave methodology, which I've kind of, it's I wouldn't say it's out of print because it's still there. I'm running out of copies, but I can always make copies. A lot of people who ask for me, I just haven't done much with it. Most people don't have CD players. That's the problem. And I don't want to put it out in some other form because every other form you can just, it gets ripped off and that's it. You're done. So I don't know what to do with that. In the meantime, back at the range, look at this beautiful cup formation, Chapman wave arch, dreaded H pattern. And it went to a lower low. It's got 3 bars in which to get above that low in the dollar at, the VIX index, which looks like the dollar, of 28.50. And so far, it hasn't done it. This is the third session below that number. So that says it should go a little lower before it rallies, and that takes you to the 25. So that's the VIX index. And look at that repellent zone. It's actually under the 14-period moving average for the first time in ages. All right, that's the VIX. I want you to do this real quickly. I want you to show you the dollar. Here we go. The dollar, same pattern. It went under, but this one is bounced above that left side low. So we're watching the dollar closely. Up 56 ticks. Basil Chapman, Tiger Conditions Hour. Dow's up almost 500.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
So let me go back just for a moment, a brief moment here to, if I can get my mouse to move, there it is. My quiet mouse. So what I like to do always is I like to say there are 2 patterns vying with one another. So you see we've just gotten to a peak E above. Look at this. Beautiful symmetry to the left side, right side. Now it's starting to stall. So the stalling pattern says to me always, consider that there could be 2 patterns vying for predominance. So I drew in naked chart. There's nothing here. There's no Fibonacci. There's no. The only reason I'm actually drawing these, I can see them visually, is to show you. The only reason why I draw that in is to show you. But I could have a naked chart. So I drew in the arch formation. My thing here, and I wonder if anybody's done work on this. How on earth does the market know how to make these beautiful symmetric turnarounds where you're getting just fractionally higher highs and then it starts to stall. And if it breaks above it, it says, that's not going to work. So there it is. As we're talking, broke above it. Now, the question is this 1 minute chart old F or is it a brand new? There wasn't a Chapman wave instant start within 3 bars. So what I like to do here is to be prepared. So I put F, capital F, on the way up, always capital F, /B. Nothing to do because this is still a very positive pattern. But what I tend to do is to say I always have to be one side is cautious. I'm like the economist. I'm saying one side can do this and one other side can do that. I'm still saying potential for a reversal. And then my eye says, well, wait a minute. Look, you've got, how does it know to make this? Look at this absolutely perfect 3 candles with a high, and it pops out of it just above it. Here's the Chapman wave inside track repellent zone, and now we're going to see. Does it pull back? It'll be very positive if it continue higher, but I'm always very careful, and I look at the patterns. I say, hey, wait a minute, this is the falling axe or up channel support. If it takes out 3860 or 3858 at any point in the next 10 or 15 minutes, you've got to be careful. Certainly going to the 3875 area would be fantastic. All right, enough with that. There we go. So you've got Merck helping the Dow today. It's up 2.42. It's up 2.4% at 100.79. Leg F, there could have been an instant restart. Could be F/B. All the technicals are fantastic. MACD is good. Stochastic's flat at 93%. Actually, it's still rising. On balance volume says, be a little careful. There could be a 1 or 2 day pullback. But this is a breakout in the weekly chart. Is this a brand new A or a G? Well, you don't get G's very often, not like this. Is it an E? Yes, it's an E in the monthly chart. So fantastic action. A leader. Caterpillar. Huge gap up 19. And I spoke about this some time ago. I said, in fact, I had a whole segment on it. I said, why is Caterpillar doing so well in this environment? Is it telling us something? Heavy-duty equipment? I must say, the diversity of this particular move, the selectivity, is just astounding. Look at a deer, not in the Dow. It's had a really good move as well. This is in the tractor farm equipment. What is going, look, peak A, peak B, peak C, peak D, Chapman wave instant restart, E/A, F/B. Still acting very well, but look at that. It's filled the gap. It's got a huge thing to climb all the way back to the 446.76 high of the week of the 22nd of April. But it's at 401 right now, up 10. It's astounding. All right, so that's what I want to, okay, the things I wanted to say is, number one, I don't know about you, wherever you are, but here in Newton, Massachusetts, well, actually in the whole greater Boston area, when I drive around, I see the fewest. Nobody would even know there's an election coming up in a week from Tuesday. It's amazing. Even down the street, there's this guy that always has the signs out. He is a school teacher, retired, about 10 years ago. He has a sign for every single person every time there's an election. Every single person on his side of the fence. Now, he doesn't have a fence. It's an open yard. But he always has nothing, not a single sign. There's a reason for it, I suspect. Maybe it's because people really fear that they're going to get things thrown at them if they have a sign for anybody. But no signs. That's number one. Okay. The Dow has a pattern that I call the squash pattern. And that says there's a real quick move with the stochastic going quickly higher. And the reason why I put the MACD above the stochastic is that this gives me that pattern that I call the squash. And it says there's going to be a huge, powerful move to a leg C. And then you might even see a little bit of a stall because the torque of the stochastic, and usually the on-balance volume, in this case, the on-balance volume's late, kicks in and hands it over to the top gear, which is the momentum of the MACD. And the MACD is still expanding. So this is a powerful move, and that's why I'm making a fuss to say that the weekly inside track repellent zone, and that says 33, and this is the weekly, of course, 33,300 starts to go out of that zone. In a single leg A, we've seen it fail at B so many times, or A. Is this going to be something else? We don't know. But this candle, because if we can go above 32,504 by tomorrow, Friday, that means we've got an engulfing green candle in the monthly chart. First time we've seen that on the upside for a long time. We've seen a lot of them on the downside. So I wanted to go through that. Now, what am I forgetting? I've done the VIX, I've done that, done that. EUR, USD. This is, did I type in the wrong place? Let's just put it over here. EUR, USD. Pulling back, made a new recovery high, pulling back a little bit. First time it is out of the above the 14-period exponential moving average since back in March. Way back in the 1.14 area. Leg B, the MACD is improving, the weekly chart, stochastics improving. I don't know, volume is flat because there isn't volume on this. But look at the daily chart, leg C with very good technicals. And that's saying that this left side high, I can do a price time match. I don't want to do it now. Maybe I'll do it tomorrow in Technical Friday of 1.019 in the euro-dollar currency pair. Maybe that's a target of this particular move. But that would imply that the USD JPY, that's the US dollar Japanese yen currency pair, that will be a peak D. I can actually now, it needs to cross -9. It hasn't crossed negative yet. Everything else says we're underneath the long-legged candle. We've now a chance of closing below it. There is definitely now a change in the very short term on the yen to the downside. That even if the dollar pops up, the dollar would probably keep coming down. So that's giving impetus to the market to move higher, especially the multinationals. That's going to be a big help. All right, did that. I must be forgetting something here. Oh, crude oil. Crude oil is running nicely now. It's up 136, challenging that inside track repellent zone, which takes me to statements in the Tiger YouTube, XLE. Yes, good move. Doji candle, XLE, below the high that was made in the 93.50. What was that high? 93.31 area. Yeah, 93.31. The week of the 10th of June in this beautiful cup formation. Well, the H pattern that turned into a cup formation and is acting really well. But there's a little doji candle. Let's look at Exxon as we go to a break. And Exxon is going into leg F. I'll be back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So we did this live. I said, I'm always looking at two patterns vying for one another. And I said, there's a chance that we could start to get a roll over here. Look at this up channel. If it takes out this left side low, watch out below. 38.58 would be the next support level. Well, here we are. And then I just drew this in. In this big candle here, where would you, there's no way, I'm not going to go down to this level straight away. I always go level for level. So I go to the left side low and I say right here, that's where I'm looking at to move to the right side. And then there's a particular candle that I always look for a midpoint if the midpoint looks lopsided. And we got this. Now I have no idea. I put in for right this minute that we're talking that this particular level of 38.48 could be hit. I have no idea. 38.48 just got hit. So look, naked charts, there's nothing here. In fact, I only did this for your benefit because my eye said this is about where I will be looking at what I'm looking at. So I'm just telling you, these patterns repeat over and over, naked chart or not naked chart, they repeat. So now what we're looking at is we've got Exxon. What happened here? Why is it every day I just hit some button or something? I feel like Larry here. On my left side, I've got something that I don't need. I'll get rid of that at some point. So now what we're looking at is Doji candle on Exxon, and I think earnings come out tomorrow. Let me just look at this. Someone posted this fabulous thing, shows the weekly charts. Let me just hold this up here if you can see it. And it's got all the big announcements coming out today. For instance, today, Shopify, one that I've been looking at for ages, and we tried to get in the other day, just got stopped out, and then it popped huge. Look at this today, up almost 5. Missed it. Yesterday, we missed another one, WeWorks. It popped up huge, going from the low 2s to 284 today, hit 296. I'm telling you that there's a rotation, and the rotation is saying all those stocks that were just horrible might find some rotation on the upside. Yeah, you got it. WeWork, I mean, this flexible workspaces just got creamed from the 15 area down to $1.94. Shopify went from, this is the post-split, went from 176, I think it was 3,000 something, from 176 in November down to the low recently of 23. It said 34. It says that it wanted 30% almost gain. And I missed it. And we've been talking about it for so long. All right. Apologize for that, subscribers. But there's this beautiful Chapman Wave Inside track. Now you've got your one-to-one to, that's the whole thing about this. Gives you a one-to-one to the upside. We've done it. Okay, so I did that. Yeah, look at the hotels. Try to get a hotel. Last weekend we were trying to get a hotel in Brooklyn. Fortunately, then we ended up staying with my son. But the rates are unbelievable, and they've got no cancellation policy of 36 hours or 48. Some have a whole week. So this is incredible what's going on here. So here's Marriott. That's 95.90 was the high in April. pulls back to the 130s, trading now at 157. The weekly chart is got this H pattern, which so far is successful. So it's running. It has to close in the 168 area to say, whoops, I'm out of the zone. I'm now moving higher. But that's Mary. Look at, let's go to Hilton. H. No, Hyatt is H. Coming into the Chapman Wave inside track repellent zone. Look how it's holding. Look at that monthly chart. You would not say there's been a major recessionary aspect. And of course, I've spoken about saying sectors have been in a recession for ages. Look at the SMHs up $1 right now at what happened here? Oh, all right, doesn't matter what happened. So this is the daily chart. It should say daily chart, and it's up. I don't even have the price. Something went wrong. I'll have to do that over again. It's at 189. There it is, 189.10. So they've been in it. Don't tell me that's not a recession for individual sectors. 318 down to 166, and one of the major. This is the oil sector, 21st century equivalent for energy of the whole electrical computerized world. And look at that. That's a major recession right there. I wouldn't be surprised if we're getting real close to coming out of this whole thing. Not yet, but I think we're getting really close. Okay, with that said, I wanted to do that. Oh, look at Cintas. This is overalls and uniforms. Look at that monthly chart. That monthly chart just says, hey, consolidation since, what was that, November? Yep, I think it was. Yeah, since December at 461.44, goes down to 340s, and here it is at 414, about to challenge the Chapman inside track repellent zone. I must tell you, if I look at certain areas, it's really depressing. But I mean, how could? Anyway, let's go to. I did that. Oh, IWM. If the small caps can actually garner strength, that's going to be important. They haven't yet. Yes, nice bounce. But these iShares, Russell 2000, not yet. But they are improving. Then I did that. XLE, what did I say about the XLE? Did I get there? The XLE is making a little doji candle high. That's why I went to Exxon. So this is that pattern we were looking at where either it's a double U pattern, and we're going into the second U, or you can just think of it as a single cup like this. I'm going to the W pattern, which says that in the left side, right side price time match, the XLE had once upon a time 99.73 back in 2014 in June. Look, I made a left side, right side price time match to a certain candle. It wasn't the midpoint, but it's the plumb line that I chose. And then it says by within 2 months, we should be hitting 99.73. It can happen before, but this is kind of the gauge that I'm looking at. So it's acting really well. Did that. I'm just looking at all the things I said I would do today. And so the question came in, do you think the QQQs can recover? And I think, based on what I'm looking at in this rotational aspect, as soon as we see the Dow start to maybe have a little bit of a digestive phase, just take a breather after the spectacular move to the upside, yes, I think that is a viable, as long as the 269 is at 275 right now. Over the next week, I don't want to see 269 taken out. That'll not be good. It means you have to restart the whole. But look, the MACD is good. Stochastic's at 84%, but it hasn't rallied. And that says, wow, what if the stochastic goes back to 20% or under? Well, obviously, it's going to make a U-shape, an arch formation, and plummet. But I'm kind of impressed. Now, let's go to Amazon. Let's go to Amazon. We're looking at Amazon. The question came in, Basil, the flash dip, which occurred in the markets 20 minutes ago. That was obviously more than 20 minutes. Is that your theory of, let me go back for my friends before the blast of, I love that. I'm so pleased you remember that expression. I'll explain. I'll go through that in a moment. But what did I say I was going to do? I was going to go to, just talk about the QQQ, which we did, and I'd go to Amazon. I'm going to Amazon right now. There it is. So Amazon, what happened? 112.87 down 280. So I'd said the other day, just nibble, that was in the 130.33 area. But I said, this is just a feeler position. It's got nothing to do with anything, just other than you'll be watching it very closely if you do that. Well, it plunged down to 105. That's a big move down. Then it ran up to the 120s. Now it's at 113. I'll talk about that in this last segment coming up. And BBBY is a question I got there from GTBB.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Above and beyond the BBBY questions within by GT. Yeah, it screamed up to 30 was a round number high. 30 exactly, round number high. I love these round numbers at tops and bottoms. 30 round number high. Okay, so, and then it plummets down to the 4s. So it's at 4 4 days ago, and now it's at 540. I'm going to suggest GT. This is exactly what I'm talking about. It is risky, but way less risky than it was. Just the selling is intense. Now I think there's a little bit of a cup formation or bull formation forming, and I would say yes, at $5.40, I would start the position. I'd rather be adding on moves to the upside rather than adding on anything down. So 540, I would have a $5, that's 40 cents. Wow. Just initially a 40-cent stop. And if it goes to 545 or 46 by tomorrow, I tighten that stop up and just let it go. And then maybe add to it only as a trade. So that's number one. And Microsoft was a question. It hasn't taken out the left side low yet. So Microsoft is in that area cloud operation. Look at IBM. IBM is just doing so. I've been talking about this for ages. IBM is the cloud place to be, it looks to me. So Microsoft, I don't have the same feeling about Microsoft to say buy it here. I just say I'd rather be buying Microsoft if it starts to fill next week, filling the gap in the 245. It's a 228. That's a big move to the upside. But I don't want to be buying it here, because if Amazon comes out tonight and really gets strong. So Amazon, today's low is 100. And if you're able to put in a stop so that you can get taken out overnight, if it starts to drop 111, I'd put a stop at 110, because I said that if you wanted to get in, someone had asked me, I said, yeah, at about 107, I think it was, I'd say yes, and then it'd speed up to the 120s. If you didn't take some profits, well, that's a problem. But looking out, if Amazon can survive and get to the 116 to 117 area by Tuesday of next week and survive anything bad, and it should be bad at the after hours, that'll be fabulous action. All right, just real quickly, I showed you the patterns. Let's just make it as simple as possible. If the